everyone, There's a Guru, Teresa Tumber here. Very excited to have you guys with us today. We're going to actually introduce my good friend Katie Brinson, who is with McLean Mortgage, and she's going to be sharing some great things with us today. But to kind of get us started, what I want to do is ask Katie to tell our viewers a little bit about your background in the financial world.
Absolutely. I got started in 2010. I was working at a fantastic place, First Citizens Bank. Was in a market that was pretty slow, was able to grow the market very aggressively. We doubled our portfolio in about 18 months. Wow. I managed 4 direct reports and a portfolio of assets and loans, about 80 million. It was a fantastic jump into real estate lending, and I decided last year to specialize full-time in just residential mortgages. So it took a lot of that management aspect off of my plate, took a lot of the compliance off of my plate, and just to do mortgages full-time. I have an MBA, go Terps, and right now I just do mortgages for my first-time buyers, investors, and all of my real estate people that are looking to grow their portfolios.
Okay, awesome. Wow, that's pretty impressive there, Katie. I'm pretty impressed with that. So, with home ownership kind of being at a weird position right now with the economy and everything, what do you think about home ownership at this time? What do you think? Where do you think that it is?
So I pulled the numbers before we met today, and I brought a handy chart. So I'm
Yay.
gonna put that up there for people, so you can kind of see we had a really huge period of economic growth from '94 to about 2008. And the fuel of that economic growth was the development of the dot-com bubble that we got to see. And we transitioned from a manufacturing economy into an information economy. That fueled huge GDP, inflation, just incredible numbers. It was the largest period of economic growth in the history of our country, actually. And then you can see in 2008 that home ownership kind of just dropped off a cliff, and that was the mortgage crisis. So after the Dodd-Frank Act and the credit restriction hit, you couldn't go get a condo in your cat's name anymore. You had to have the ability to repay, you had to meet credit requirements, you had to have verifiable and documented income. So that caused about a 6% drop. Historically, if you look at the trend, it pretty much lines up with the economy. You can overlap home ownership rate with the growth of the economy. And we're on the bounce back as millennials have transitioned into becoming comfortable with an information economy. They've graduated from college. They're actively pursuing markets right now where home ownership is attainable. And companies are starting to transition corporate headquarters into markets that are very attractive to millennials. The top factors right now contributing to suppressed home ownership tend to be culture. Millennials are a little bit more transient. We like to be able to hop around. You don't grow up in a town, stay there, and work at the main company in town anymore. You tend to hop around. And then global events in our culture typically create economic uncertainty. And so because the media tends to give off the impression of negativity, sometimes that does impact people's willingness to buy. But we're seeing right now that the market is opening up, and there's going to be a tremendous boom in millennial home ownership.
Wow. So do you think that the presidential election has anything to do with all of this?
So the one thing that I've learned in the years of my economic study is that our economy is larger than any individual in office, and that typically the markets react short term to consumer emotion. You'll see that an announcement comes out and the next day the market reacts. But long term, the economy is kind of a self-sustaining machine. And the fantastic thing about the way capitalism is set up in our country is that it's fueled by growth, it's fueled by prosperity, ingenuity, and all of the fantastic things that our economy offers to Americans. We have incredible entrepreneurs in our economy, and what they do is greater than any one politician.
Wow. Okay. Well, I appreciate that. That was a great way to explain that.
Absolutely.
So, if someone was thinking about trying to get into a home and purchase a home, where do you think they should start?
Definitely with their lender, they want to get pre-approved. You want to make sure that, first of all, the home that you're looking at fits into your budget and it meets your needs. It's very important to make sure that you're budgeting for repairs. If something breaks, you can't call the landlord anymore. The other thing is you want to make sure that you take your first-time home buyers class. VHJ offers a fantastic free one. You can go online. It's about 2 hours long, and it teaches you some of the things that maybe you don't think about being a renter. What to look for, what the maintenance schedules are, what you need to take care of. The other thing is working with a lender allows you to go through underwriting so that you can be confident that when you make an offer that it's a legitimate offer that can close.
Okay, that's great. Do you think that if someone has bad credit that it's impossible for them to really be able to purchase a home?
Definitely not. You know, as the economy has changed, people have gone through different credit events. And so just because somebody had a speed bump in the past doesn't mean that they can't buy now. As long as they've reestablished themselves, they have a decent explanation for what happened, and they are working in a stable job with stable income, it is possible to rebound. And one of the most important things about rebounding is using an accurate credit simulator. If you go online to places like Credit Karma, or you use your credit card simulator that they give you for free, it's not always accurate. You want to work with a lender who has the experience of credit simulation and credit monitoring. That way you can effectively pay things that need to be paid. A lot of times the simulators will suggest paying card balances down or paying things off that you may actually not need to. So you can keep your money in your pocket and really leverage your assets appropriately.
Okay.
But it is completely possible. You know, the minimum score is typically a 620 that you need for an FHA loan or some other programs out there like USDA. And those loans are a little bit more expensive, but at least get your foot in the door.
Okay. Now, let me ask you this is a question that I really I'm always getting confused of, and I'm sure there's a lot of people out there that get confused about that too, is there's a pre-approval thing, and isn't there
a pre-qualification?
Yeah. Can you explain that? Because I know that gets very confusing for first-time buyers, or any buyers, really. I know for me, when I just bought my new home now, it was kind of confusing for a lot of people. So.
Right. So a pre-qualification is basically a loan officer's opinion. They've looked at your credit and they think that you're in good shape to buy. A pre-approval is very different. That's when your assets, your debt, and your income have been properly evaluated by a loan officer, and you've been run through an automated underwriting system and have been generated an approval status by an automated system. So that means that you have a loan that is basically sellable, that you can sell to an investor, that, you know, at least with the initial review, that you meet the requirements. So that is a much more solid offer. If I were a seller and I had a pre-qualification versus a pre-approval in front of me and they were identical offers, I'm going to take the pre-approval offer because I know that they've been through underwriting.
Okay.
The cool thing that McLean Mortgage does is we offer something called Loan First. That's where not only do you go through that initial round of automated underwriting, we have an actual human underwriter look at your file, verify your assets, talk about any conditions that there would be for closing, and you go out into the market with an actual certificate that says, I have been through underwriting and I am approved.
Okay. Now, this is one that you may not know because I didn't really kind of ask you this question before, but only because it was something that you and I went through in the beginning when we started, and you helped me with my home. And had I have not gone through you, I wouldn't be in this beautiful home because the last company didn't want to give me the loan because they said we had to sell the other house, and we wanted to keep our other house as a rental. Do you remember that?
Yeah, we turned you into a real estate investor.
Yeah, so do you remember that they were offering all these great things? They were offering, you know, no closing costs. And I hear that they're being advertised in our area quite well now on the radio. You're hearing them. So, and I don't want to call out their names, but you know who we're talking about. So tell me, because you explained it to me really well, like how they're getting that no closing costs, no this, that, and the other. How did they get that to where, I don't know if I'm asking the question.
No, so I totally get it. So basically consumers don't understand, they always look at the interest rate or the closing costs. They don't understand the big picture of how all of those things factor into how much does it cost to obtain credit. So there's different factors in the cost of obtaining a loan because money isn't free. So if you hear an advertisement on the radio and it says no closing costs, that does not mean that you're not paying things like recording fees, your prepaids, or your title search. There are still fees associated with obtaining the loan, but maybe they're not charging you an underwriting fee or a credit report fee. However, they're still making money. So the money is in the interest rate. You know, maybe they add 1/4 of a point to your interest rate to compensate. On paper, you think, wow, I don't have anything up there in the lender expense category. I didn't pay for an appraisal. But the reality is 1/4 point on a $200,000 loan can cost an extra $10,000, $20,000 over the lifespan of the loan. So why would you pay an extra $10,000 when you can pay $500 up front and just get a lower interest rate? Yeah, so it's in there. It's always in there, and the consumer just needs to be knowledgeable enough to ask the question of, I know this is coming from somewhere. How are you making your money?
Making money. Yeah. And I think I actually said that to you.
You did. You did.
So tell us what McLean Mortgage does that sets you guys apart from other mortgage companies out there, because I know you guys are really special in my eyes because you did a really great loan for us. But tell us why should somebody choose McLean Mortgage over other options out there?
So I love our culture. When I was looking for a place to work down here, I had a lot of different offers on the table due to some of my connections in Northern Virginia, and I wanted to work at a company that I could fit in culturally. And one of the fantastic things about McLean is that we were founded in 2008. We were a debt-free company. We were not in business when people were doing crazy subprime loans. You couldn't go get, 10 condos on stated income. We do things the right way. We've always done them the right way from the beginning. Another thing that has set us apart and made us an industry leader is that we are a lean, mean, agile closing machine. We don't have a ton of overhead. We're pretty quiet, in the markets that we're in. We just work on reputation. And so because we don't have a lot of overhead or expense, we have stripped all the fat out of our interest rates, and it makes us competitive, and we've perfected the closing process.
All right. Awesome. Is there any other suggestions or points that you might give my viewers if they were considering to own or even become, landlords now?
Absolutely.
Is there anything that you would be thinking about?
So real estate in America is the fastest and most efficient way to grow your wealth. Somebody who owns real estate has a net worth on average that's 60% higher than somebody who does not own real estate. So jump in, work with an educated lender.
Like Katie.
Like me. Don't limit yourself, putting out those limiting beliefs. I can't be a landlord. I don't know how to manage property. I don't know how to cover a mortgage if I have vacancy. Don't let those thoughts limit yourself. Jump in, get educated like Teresa did. Work with a property manager if you don't want to deal with tenants and you don't want to learn landlord law and screen them. And just jump in there and get your feet wet, and everybody learns through experience. But this is a fantastic time to buy. Interest rates are still at tremendous historic lows, and as far as leveraging your wealth, it really is the right time to do that.
Awesome. Well, Katie, thank you so much for doing this today. And I thank all my viewers. I'm very excited to have this great information put out to you today. And I'm sure we'll have Katie around again to share some new things that I'm sure the economy will always have different things going on that she can come teach us more stuff. So thanks again, everybody. Bye for now.